right, good evening everybody. Today is May 21st, 2023. It is a Sunday. It's about 8:48 p.m. here. We are reporting live, Columbus Circle, 59th Street, and we have our very own Frank Sinatra blasting in the background. It's going to be, I'm not going to say a shortened week on Wall Street because it's not, but we have to keep in mind that next Monday is Memorial Day. So you're probably going to see volumes deteriorate and decline substantially on all of the exchanges going into next week, right? A lot of the bigwigs on Wall Street are probably going to call it quits Thursday, Friday, so they get that big 4-day weekend. Obviously, with everything being closed on Monday, which is Memorial Day. So hopefully everybody had a fantastic weekend. You took some time to relax. Now you're recharged to hit it hard starting tomorrow on Monday. Now, it's not really going to be a dead week. We do have some notable companies reporting earnings. We are also going to hear from the Federal Reserve as they release their minutes from the Federal Open Market Committee's meeting. Now, this was back in early May. We already really know what was said. We sort of know all the policies and the changes that sort of went on there, but we'll go into that. I want to talk a little bit about Apple tonight. They've been breaking into the fintech world. They've been breaking into payments, especially with the buy now, pay later, but I would say most notably with their new checking account, or I should say their new savings account that offers, I think, about 4.25% yield on your savings. Now, this is a partnership with Goldman Sachs. Now, if you think about Goldman Sachs, it is a pure play investment bank. But over the years, David Solomon, who is the CEO of Goldman Sachs, has really tried to break into the retail consumer banking, which unfortunately that has failed. They tried to break into retail and consumer banking with their Marcus by Goldman Sachs product, which I believe they are now turning down and shutting down completely to focus on their very lucrative investment banking operations. So we'll discuss all that tonight. Let's take a quick look at futures. So futures trading just opened. If we look at the E-mini futures for the S&P 500, ticker symbol ES, we are about flat, down about 3 points, trading at 4,201. If we look at the NASDAQ 100, E-mini futures for the NASDAQ, the NQs, we're also about flat, down about 2 points. Although the NASDAQ had a thunderous week last week. The NASDAQ was up over 3% last week alone. We've been clearing away a lot of that overhead supply. But the NASDAQ has really been led higher by semiconductors, which we'll talk about. You know, just for some context here, if you look at ticker symbol SOXX, which is essentially the semiconductor indice or the index, that has been performing really, really well relative to a lot of the other indices and sectors out there. And lastly, we'll take a look at the Dow Jones Industrial Average, ticker symbol YM. We are down about 29 points, so pretty much about flat to the Dow 30 is trading at 33,466. And before we start, we might as well take a look at crude oil futures too, because we're going to be talking about crude tonight as well. Trading at $71 a barrel. Talk about crazy, because if you remember all the way back, I think the exact date was March 7th of 2022. Crude oil hit a high of $130 a barrel. You had all of these major investment banking analysts coming out saying crude oil is going to go to $200, $250 a barrel. The exact opposite happened. So we'll talk about contrarian trading tonight. But let me go ahead and close up my laptop. We'll get away from the blaring music and we'll get started here. But first, let's say hello to everybody in the chat. Hey, Sparks Carnival is here. Good to see you. NAV0407 says, hey Tom, welcome. Shady Cooper, good to see you. TACP5000, welcome. Design Ideas. Boomer is here. British Gray D. Matthew P. CA2SD. Big task at hand. What's up? Chad is here. Says beautiful night. the investigator. Welcome, welcome. All right, let me put on my backpack here and let's get out of here. Now, I'm a huge Frank Sinatra fan, big Frank Sinatra fan, but not a big fan of Frank Sinatra at this volume. I think this volume is a little bit, maybe it could be too much of a good thing, so to speak. Carol Brown, what's up? Welcome, welcome. Team, what I want to do tonight, because last night I took you guys down to 34th Street, Pennsylvania Station. You were actually able to see the contrast from the old Penn Station to the brand new Moynihan train hall, which I thought was pretty cool. But tonight I want to take you guys to the east side of Manhattan. Okay, we are going to go to the Upper East Side tonight, but we're not going to go too far. We're just going to go to Sutton Place. Sutton Place is one of my favorite places. My friend Sparks Carnival, I think he was talking about Disney. Hey, Susanna Q4 is here. What's up? Welcome. Maurice Palmer, thank you so much for joining us. Now, you know, Disney, obviously with Bob Iger back at the realm, back at the handles here, a lot of investors are bullish, but Disney really has this ongoing feud with the state of Florida, and I don't want to get too political, but I think it's important just to bring it up, right? Because investors are a little bit squirmish and a little bit skittish about it. Yeah, DeSantis and Bob Iger are sort of going back and forth at each other, right? Disagreements over, you know, just use your imagination. We won't get too political on the stream. I think it's a little bit overblown. And if you really read into a lot of that information and a lot of that data, here's one of the horse and carriages coming down Central Park South. I think the story is that they cut about 2,000 jobs. Allegedly, they're going to bring them back to California, and they're going to cease expansionary activity at the Disney theme park in Orlando, Florida. But you really gotta understand something here, everybody. Do I think it probably had to do with the politics and the political blows? Yeah, maybe, possibly. But every company is really doing that right now. Very, very few companies are in expansion mode. You know, we've been covering this almost to the point of ad nauseum on the stream. Companies are in cost-saving mode, right? I like to use Meta, which is Mark Zuckerberg's company, you know, formerly known as Facebook, as sort of the poster child for cost cutting this year, right? So if you look at the performance in terms of the stock, the equity returns for Meta in 2022 is really horrible, really egregious. But in 2023, Meta's been making a really big comeback. And I think that's due to shareholders, right? Especially very, very large shareholders in Meta, really getting on Mark Zuckerberg's case about really reining in a lot of the spending. So their virtual reality, metaverse, whatever you want to call it, sector of the business is really burning a lot of cash. They made a lot of, you know, one-time upfront investments into, you know, brand new chipsets and data centers in order to support their vision for the metaverse. But then, you know, shareholders get upset, and you got to pay for that, and you got to answer for that. So it's not only Meta, but I think they're one of the companies that have made a lot of drastic changes. I mean, laying off about, what is it now, over 10,000 or so employees. Amazon going through layoffs, but this is just a normal business cycle, folks. I think it's really cool that we've now been doing this live stream, I think for about 2 years now. So as we have these conversations, we start to see a full business cycle take place. And a lot of that is controlled, I should say the levers are controlled by the Federal Reserve. Our friend Jerome Powell at the Federal Reserve, because as interest rates were artificially suppressed, pretty much leading up till just the last 18 months, companies were incentivized to take on risk, to take on debt that was extremely, extremely inexpensive, and invest in their business and grow their businesses. But as interest rates have started to go up, the Federal Reserve has raised the benchmark Fed funds rate to the tune of 500 basis points. Now, right now, the Fed funds rate, the target range is 5% to 5.25%. You know, that has essentially made the cost of money exponentially more expensive, right? You know, interest rates in the bond market, quite simply, is just the cost of money. So if things get more expensive, if it's more expensive to start borrowing, that sort of slows down things and cools down the economy. And if there's not enough demand, right, for products and services, all of those people that you hired during the pandemic boom and all the fiscal stimulus and all the monetary stimulus out there, you really don't need those employees anymore. So there's major cost cutting across the board. So I don't know, maybe to bring it back to the Disney thing, I do think it is political, but I don't think it's as political as the media is making it out to be. In my opinion, just my opinion. We're crossing Central Park South now, everybody. We are going to be walking directly past the JW Marriott Essex House, which Marriott actually reported a really good quarter last week. Hyatt reported a fantastic quarter as well. Hospitality, right? Talk about there's always a bull market somewhere. You just need to know where to look. Hospitality's been doing really well. Hospitality, luxury, and semiconductors have been doing really well. Real quick, everyone, I want to show you this. This is the Deutsche Bank Towers here. Now, tomorrow on Monday here in New York City, we are going to be hearing from a major Wall Street megabank, the largest Wall Street megabank, which is Jamie Dimon's own JPMorgan Chase. Yes, Jamie Dimon and JPMorgan Chase will be holding their Investor Day right here in New York. And I think that's probably why it's a little bit busy on this Sunday night. New York Athletic Club was rocking tonight. The Park Hyatt was jam-packed. I think JW Marriott Essex House is almost at capacity. A lot of bankers and a lot of investors in New York for tomorrow as Jamie Dimon and JPMorgan Chase take the stage for the Investor Day. Hey, Sparks Carnival says Airbnb gave disappointing earnings. Gave disappointing forward guidance though. That's true. Sparks Carnival, I actually wanted to ask you this question. What are your thoughts about the new announcement? This is the inside of the Essex House. All the original Art Deco style, which is absolutely gorgeous. But Brian Chesky, which is the CEO of Airbnb, he didn't announce it on the earnings call. He announced it on Twitter, actually. And he said that they are going to be introducing a new product line, which is essentially just a new service line called Airbnb Rooms. So essentially what they want to do is go back to the grassroots of how Airbnb was founded, right, where just people just sleeping on your couch. They want to bring it back to their core values and offer a service called Airbnb Rooms, where it allows people to list their individual rooms on Airbnb to rent out, which I actually think is a really good idea. I don't know, any thoughts there? Every time I bring up Airbnb, the chat is always divided, and I get that because a lot of people are not comfortable with the idea of having a random person in your house, right? And I get that. Gary Carpenter, good to see you. Welcome. UniJ23 says hello, Tom and everybody. What's up, UniJ23? Sparks Carnival says the 30-day lease is the fastest growing time frame of Airbnb bookings. It absolutely is, and I'm a part of that too. I think I told you guys. Now, for those of you who don't know, I have a place in Miami, Florida, and I only exclusively rent it out now on 20-plus day time horizons. Now, it doesn't mean that that's the best strategy, but for me personally, what I've noticed is when you have a lot more turnover in your property, especially on a shorter term rental service like Airbnb, number one, it could attract not the best tenants in terms of people that take good quality care of the property. I'll just leave it at that. Won't go into specifics. But also the expense and the turnover is a lot higher, and I'm talking about a lot higher. In my experience, it's much easier to rent out, my place. This is 106 Central Park South, by the way. This is my old building. It's easier to rent it out for 20 days or 30 days because chances are the people who could afford to, spend $3,500 or $4,000 renting out an entire house for 30 days tend to be more responsible individuals. So you're going to have a really consistent tenant, but also you only have to pay to clean it once, right? So I charge a flat cleaning fee of $75. That's it. And when they leave, I just send the maid service in. They clean the whole thing up. As opposed to what I was doing before, this is 6th Avenue, just to sort of keep you guys in the loop here. The Ritz-Carlton Central Park is right in front of us. What I was doing before is I was renting it out on a weekend basis. I was having, people just coming to Miami Beach, just party for the weekend. And it was getting really expensive with the cleaning service. So it's much more lucrative to extend your time horizons. Just in my opinion, I don't know, has anybody else have any experience with Airbnb their own properties or maybe relatives who are in the business as well? Hey, Justin S. says, Tom, my uncle rents out his second house weekly during the summer months for vacationers. He's been doing it for the past few years, has to clean it every Friday between renters. So how's he doing with that? I'm assuming if he's been doing it for years, it's pretty lucrative business, right? Tatum says, hey Tom, I am staying at the Essex house. Wow, dude, awesome. Well, enjoy your stay. I promise you're gonna enjoy it. It's one of my favorite hotels in New York City. Real quick, before we head to Sutton Place, I wanna point this out to you guys. You see this building right here? You see that building right here sticking up? Now that is 53 West 53rd Street, okay? Now, I know what you're thinking. Well, before I say that, that is one of the buildings on New York City's Billionaires Row. Now, I know what you're thinking. It's not on 57th Street, which it's right, that's true, it's not. But that is part of the collective here in New York City of the Billionaires Row sort of spectacle we have, right? So if you keep walking down here 2 blocks, this is 58th Street, 57th Street is next. You'll hit into Billionaires Row where you have 111 West 57th Street, or the Steinway building it's called. Right next door to that you have 157, which was actually the first original building that kicked off the trend of Billionaires Row. Bill Ackman in Pershing Square Holdings actually bought a penthouse there. I think it was on the 93rd floor, or maybe the 83rd floor, I think for $90 million. I'm not sure, I really don't think they're up on that investment, by the way, because essentially what you've had ever since 2014, when the Billionaires Row trend really kicked off in New York, you had an explosion of those Billionaire Row type properties, right? So the first one was 157. Then you had 432 Park Avenue, which we're actually about to see in a moment as we come up on the Sherry Netherland, which is another great hotel, has a lot of financial history too, with Jesse Livermore. We used to call him Boy Plunger on Wall Street way back in the day. And then you've had this massive explosion in Billionaires Row properties, right? Central Park Tower, 220 Central Park South. So they're not as unique in terms of the individual units as they used to be, right? They're still very coveted and sought after. But there's a lot more $80 million apartments to be had in New York as opposed to the scarcity as it was in 2014. Hey, Chris Beeman is here. What's up, Chris? Good to see you. Thank you so much for being here. Hey, buy the book. What's up, dude? I hope you're well, and happy Sunday to you. Justin S. says, yes, it pays off the mortgage until he gets to retire and move there permanently. We have a weekly baseball countrywide camp in the summer that has a lot of family travel. Well, that's really good. And I think Justin S. makes a good point, and I actually just want to quickly touch on that because you'll see where we're going with this live stream. It is, talking about these ridiculously priced apartments, right? $80 million. Funny enough, one of my buddies sent me a listing, and you guys could look this up while we're talking about it. I think you'll get a kick out of it. It's a beautiful apartment, by the way. It is in 157. It just went into contract, I believe, late Friday night. The rent is $125,000 a month. Not a year, a month. Just went into contract on Friday. Check out the unit, Google it if you want to look it up on StreetEasy. Unreal place. But sort of as we talk about, how ridiculously expensive housing is, I honestly think that platforms like Airbnb, platforms like Vrbo, right, the VRBO platform, which is sort of like an Airbnb, but it only allows longer-term rentals, right? So you can't rent, a partial home for, just individual rooms on Vrbo. It's entire properties on VRBO, right? I think those types of platforms are actually going to help millennials and Gen Z to acquire and accumulate properties and build a net worth. Because you got to think about it like this. And real quick, everybody, this is the Plaza Hotel, but on the Central Park South side, this is actually not the hotel, this is the residences. So you'll see it in a moment as we sort of pass by all of the gorgeous architecture and these gorgeous, I guess you could call them lampposts. This is actually residences only, but look at the detail on that. Isn't that unbelievable? It's beautiful, right? Now, anyway, I think these type of programs or these types of businesses, such as Airbnb and the like, is actually going to be the one saving grace for a lot of millennials and Gen Z like myself. Because if you can save up enough money for a down payment, if you could do the right thing, right, you will be able to maybe live in one of the rooms, right? Or let's say if you buy a duplex, you live on one side of the house and then you rent the other side of the house out on a platform like Airbnb or Vrbo, and that should cover your monthly expenses in terms of your mortgage, right? So, it's sort of like a double-edged sword. It's, how could we overcome the crisis, and I think it's appropriate to call it a crisis, of this astronomical housing expenses in the United States. I think a lot more millennials and Gen Z are going to turn towards those creative solutions to try to build a net worth, to try to acquire properties and accumulate properties, so maybe they can have an additional source of income in retirement. I don't know. Any thoughts on that? Hey, Wabi says House Hackers Unite. Yeah, I mean, look, that helped me get my start, right? I shouldn't say the only way, but a big reason, guys, why I was able to acquire a property is due to house hacking. I'll admit it, I don't care. It's helped me out a lot. And if you do it the appropriate way and you don't over leverage and you put a nice healthy amount down and you're well capitalized, you essentially live for free, in theory. Hey, Dan Zhang, what's up? Says, hey Tom, how was your day? This weather is perfect for you to stream. That is true, it is good streaming weather. It's not too hot. But Dan, my day was good, dude. It was good. I took the day to relax. I've been doing a lot of travel, and I'm not too sure about you guys. This is 432 Park Avenue right here, but I don't know about you guys. Every time I travel, and let's say like 2 days or a day or two after I travel, if I don't get 8 hours of sleep, I'm automatically getting sick. I don't know what it is, but it's just going to happen. So I slept in today. I had to make sure I moved some things around. I can't afford to get sick anymore. So I don't know. Travel just really knocks me out for whatever reason. All right, let me stand up on this thing so I give you guys a really nice view of the Plaza Hotel. It actually looks like it's packed. You could see some guests, coming down the stairs here. Hey, I see Hang with Mark Mom. What's up? This is Tom's son will rent 2 of the 3 apartments while living in the 3rd. That's a studio apartment, free while the others are paying for the mortgage. Yeah, I mean, a lot of people are starting to do that now. And, to hang with Mark Mom's point, I sum it up in sort of one phrase. And here's my phrase that's really helped me out. It's delay instant gratification. When you're young, when you're in your 20s, especially your late teens, all the way through your 20s, if you can really ruck it out and delay that instant gratification, the person you become in your 30s is going to look back and say, oh my God, thank you so much for doing that. So, yeah, I totally agree. Hey, Ed T is here, says, what's up, Tom? What's up, Ed? Thanks for joining us. Michelle Henry says, I purposely take Sundays to relax and do not do too much of anything. I go to church and that's about it. Yeah, I mean, you know, I am religious. I'm a Catholic. I was raised Catholic, right? So Sunday is supposed to be the Lord's Day. You're really not supposed to work. But I tend to not do that, which I probably should cut back and just relax on the Lord's Day, which I understand. But that's what I did today. I just sort of hanging out today, guys. Hey, Abdullah's like, good to see you back, Tom. Thank you, Abdullah. I appreciate that. My good friend Sabrina Fair is here. Thomas L. says hello from Pennsylvania. Welcome, welcome. Peyton Lobster says, hey, Tom. What's up, guys? Justin S. says, what do you think happens with the houses that the baby boomers are in? They're just being inherited to the family, or are they being sold for top dollar? So I think that's appropriate to talk about that because we are going to get some housing data this week. I got to plug a podcast, and it's not a controversial podcast, but it has become a controversial podcast because of the Silicon Valley Bank collapse. I think you guys already know which one I'm going to say. It's called the All In Podcast with Chamath Palihapitiya, David Sachs, and the like. And there was one particular episode that was really interesting and fascinating to me. I wish I had the episode name, but I think it was the episode before the last one that dropped on Twitter, if that makes sense, if I'm explaining that right. So it's not the one that just dropped on Twitter. This was the first podcast ever uploaded on Twitter Blue, but the one they recorded before that, Chamath made a really good point. He was talking, I think the topic was about happiness and wealth, right? That's a very famous and notable topic. And Chamath was like, look, if you look at the demographics and you look at the data in the United States, it's true. The vast majority of the wealth and the vast majority of the assets, especially real estate, is crowded into the boomers, right? The baby boomers and the older generations. And younger generations such as the millennials and Gen Z, over the next coming years, really, really soon, right? Because America has a very big aging population, is going to inherit all of that wealth. So when he was sort of arguing on one hand that, yeah, it's never been harder for young people to really make it, because when they're coming out of college, they're coming out of university with crazy amounts of student loan debt, which I'm very sympathetic of. They're coming out of college and have to rent an apartment in New York City where you're going to pay $5,000 a month for rent, which I'm very aware of. But what he was saying is, if you really look at the data, the millennials and Gen Z are going to inherit more money than any other generation that's ever lived. And that is true. Now, the question was, do you think that's going to be sold at top dollar or passed down through inheritance? I think a little bit of both. Now, what I've been noticing when I talk to my friends, right? So just so you guys know, the age range that, you know, I sort of live in, right? I'm 27 years old now. So my friends are right around 24 to like 35, right? Or that are like my main core friends group. And if I could describe one commonality between that demographic, it's that they value freedom over everything. Now, I'm not talking about like financial freedom and sort of what you're thinking. It's mobility, freedom of mobility, freedom to travel, freedom to really do whatever you want. And studies have actually reinforced that. You know, millennials and Gen Z actually want to spend more money on travel, on experiences, as opposed to material goods, right? That is an emerging trend. So I think once they inherit those properties, it's a big possibility that they could just put them on the market and list them and sell them and use that money to travel. I don't know. Yeah, Wobbies is not being tied down is the ultimate. I agree. It's interesting to see how different generations throughout the U.S. Prioritize living, right? You know, when my grandparents were my age, and raising a family, raising my mother, raising my father. The American dream was a white picket fence, single family home. Maybe the father just works a 9-to-5 job, the mom stays home with the kids. Think about how that is fundamentally changed in America, right? And it's very important to notice those trends and understand those trends as investors, because that'll help us identify the next big true market leaders. Hey, Matthew M, what's up? Good to see you. Guys, real quick, this is Louis Vuitton. LVMH, Moet Hennessy owns this particular company, and Tiffany is right across the street. Now this thing is freaking me out a little bit. I actually got to get a closer look. Yeah, I don't know how I feel about that. What do you guys think? Does that freak you out a little bit? I don't know, it's just something about it's freaking me out a little bit. I think I'm going to continue to walk. Very beautiful display, but I am a little bit freaked out. All right, anyway, right across the street is the brand new Tiffany's flagship, everybody. So this just opened, which is really cool. Hopefully one day, if I can get off and stream during the day, I want to take you guys on a guided tour through here, because I think it's very important, right? If you look at some of the best performing stocks on the market, LVMH is one of them. Record profits. This is a luxury brand. They purchased Tiffany. They did a total rip and replace, built back up the brand. And just 2 weeks ago, you had the grand opening right here on 5th Avenue. All right, let me get to some of the comments here. Hey, Wendy England is here. What's up, Wendy? Happy Sunday to you. Justin S. is Tom, where is the new Versace store, the one that got moved? You know what? I'm not too sure. It's a good point. So for those of you who don't know what we're talking about, Versace used to have the big flagship store right next to the Cartier store. They shut down, which really surprised me. But you're starting to see that a lot here. You're starting to see a lot of retail space and commercial space become vacant, just because the rents are so astronomical, and foot traffic is down in Manhattan, especially on the weekdays, because not a lot of people are coming into the office. That's another thing that we've been talking about here, is vacancy rates for commercial real estate in New York is at all-time record highs. And that is a problem. So we'll check out the windows here at Tiffany. I see Susanna Q4 is here, welcome. Photos from around New York, our good moderator. This is Tom. I rewatched Breakfast at Tiffany's. Lena Sandoval is here. Robert Brunn, good to see you. Hang with Mark Mom, welcome. Hey, Bagels and Walks. What's up, man? Good to see you. Welcome. Hope you're having a good Sunday night. Now we'll bang a right on 57th Street, because I got to take you guys to Sutton Place tonight. Everybody's taking a quick peek at the windows here. Before we move on, I'll show you the Steinway Tower, which is right here. And then I want to talk about an interesting Barron's article that I read this week. Now, we're going to talk about being a contrarian tonight, and I want to do that in honor of the late, great Sam Zell. So we've been talking about real estate a lot. We've been discussing it a lot, particularly in New York and Miami. And for those of you who may not know, we lost probably one of the biggest real estate legends in America, Sam Zell. He died in his early 80s. He was a great guy and one of the most successful real estate investors and entrepreneurs in American history. His story is quite amazing. His family fled Poland during World War II and came to the United States. He really didn't grow up with much, so he's totally self-made, and he built an amazing real estate empire. I recommended you guys watch the biography, or I should say documentary, on Sam Zell. He has a lot of rich history with Steven Schwartzman, a lot of interesting stuff there, so hopefully you were able to check that out. If you just type in Sam Zell documentary on YouTube, it'll pull it up. But yeah, I want to talk about being a contrarian tonight because Sam Zell is very famous for being a contrarian. And I think his nickname was the Grave Dancer, something along the lines of that, because he specialized in distressed debt, right? Distressed properties, finding essentially diamonds in the rough, if you will. And let's think back 2 weeks ago now, or was it a week ago? I'm sort of losing track of time. Well, anyway, about 2 weeks ago, the University of Michigan Consumer Sentiment Report came out, and consumer sentiment is at some of the lowest levels in history, guys, in over 40 years, if you could think about that, right? However, as we reviewed at the very beginning of the live stream, take a look at all the major equity indices. Take a look at the S&P 500. Take a look at the NASDAQ. Take a look at the Dow 30. All of those indices are trading above their respective 250-day moving averages. So you have consumer sentiment at an all-time low. You have fears of this debt ceiling pretty much at an all-time high. And I think those fears may grow into this week, right? Because June 1st is the deadline. And if you think about what we have going on, not this Monday, but next Monday, it's Memorial Day. So everybody's going to be out of the office next week, pretty much. So I think fears are going to grow on that. But the market is still resilient, okay? The market is still resilient. And I think it's important to sort of visualize that and understand what that means as an investor. Because I've always said this. Hold on, let me give you guys a really good shot of 432 Park Avenue. Look at how unique that looks. Now this is on the corner of East 57th Street and Madison Avenue. This is actually my new office, guys. I haven't told you yet, but this is going to be my new office, my permanent office right here. I'll inform you guys a little bit later. But anyway, so it seems as if you have consumers and investors the most bearish they've ever been. If you look at cash positions, right, and we could sort of monitor this by looking at fund flows out of traditional banks into money markets, right? So how many funds on Wall Street, how many mutual funds, how many hedge funds, how many family offices, retail investors are pulling their money from equities and putting it into money markets, putting it into T-bills. It's at an all-time record high, or pretty much. So you have what I like to call the magic elixir. And I'm playing a little bit of devil's advocate on the stream tonight because I like to give both sides of a thesis. So you have consumer sentiment at an all-time low. You have pretty much everybody calling for a stock market crash. You have tons of people calling for the United States to default on its debt, which, to use Ray Dalio's words and not mine, you could have an Armageddon style stock market crash where the S&P 500 goes to 1,800. Okay, those are the projections. All while you have record amounts of cash on the sidelines. That could be very bullish. So I just want everybody to keep that in mind. This could actually be very, very bullish because stock markets and equity markets in general tend to crash when everybody is on the same side of the trade, right? When you have irrational exuberance, when you have, all the meme stock nonsense going on, when you have rampant speculation on Wall Street, when you have artificially suppressed interest rates, right? When you have, PE expansion and, particular stocks trading at ridiculous multiples to sales, ridiculous multiples to earnings. One could argue we actually don't have that right now, right? If you look at a lot of the, the frothiest funds on Wall Street, right? I always like to pick on Kathy Wood, but she's fantastic. I'm just doing it to make a point. If you look at all the, high beta, I should say, extremely high beta speculative funds on Wall Street, especially the ETF business, the ARK innovation funds, those things have been freaking clocked. Okay, those things are down 90%. From all-time record highs. Retail has really taken a bath and lost a ton of money, with record amounts of money being on the sideline, with record consumer confidence at an all-time low, with manufacturing which we're going to get more manufacturing data coming out this week, by the way. All of the leading economic indicators have been collapsing and rolling over, but they're just starting to improve. Could be a bull thesis. I don't know. Thoughts there? Yeah, Harry Connor says, won't inflation skyrocket? Well, I don't know. I think we need to keep things in perspective about that as well. Everybody is freaking out, including myself. Maybe freaking out isn't the appropriate term, but if you think about, the inflation rate in the United States, we're right around 5%. But let's look at our friends in Argentina, right? Look what's going on in Argentina. You have 107% inflation in Argentina. Think about that for a second, guys. In Argentina, you have 107% annual inflation. That number just came out for April. And you know what happened? Does anybody not want to know what happened? The interest rate set by the Central Bank of Argentina in order to avoid devaluation is 97%. So, is inflation a big problem in the United States? Absolutely. I'm not trying to be an apologist. I'm not trying to cover up for any politicians. I'm not trying to do that. All I'm trying to do is zoom out a little bit. Right? Let's take a look at the global macro perspective. And I always talk about this. The way I was taught is when you're first starting to build a fundamental thesis, if you're managing a portfolio, you want to start with a top-down, bottom-up approach to investing. So you want to try to understand what's going on in the macro, right? What's going on in the world, what's going on across the globe, and then you want to drill down into your specific country, then you want to drill down into your specific sector, and then once you've drilled down in your specific sector, then you could start to research individual stock ideas. So I don't know, inflation is definitely a massive problem. I think everybody understands that. But in other parts of the world, it is, I don't even know how to describe that. I don't know how people operate with 107% inflation. And I love Argentina. We have a lot of people tuning in to Walks on Wall Street that are from Argentina. I want to stand across the street to show you guys 432 Park. Hey, Daniel EA is here. Chinook wins, what's up? Says, since our theme tonight is contrarian, I will submit China's annual inflation rate fell to 0.1% April of 2023. Yeah, that's true. Now, I got a question for you on that, though. Can we trust the information coming out of China? And the reason why I ask that is because somebody in the chat challenged me on that the other night. And I think it's an interesting question. Now, if you think about it, China's industrial and retail output actually fell at the start of the second quarter. And this was all while U.S. Retail sales rose, right? And which to me is actually the exact opposite of what I originally thought. And you guys know my thesis on that. I've said I think China is going to go through a boom because they've finally stopped the zero COVID nonsensical policy. So my thought process is, look, if China was growing at X amount with the zero COVID policy in place, but once the country opens up, that should cause a boom, sort of like what happened in the United States with all this pent-up demand. But we're not really seeing that, which is, I don't know. Does anybody have an explanation for why that may be? Because I thought, and I've laid out this case multiple times, this is 425 Park Avenue, by the way. This is a beautiful Class A office tower that just went up. We're not really seeing the pent-up demand like you saw in the US. We're not seeing it. Hey, SME Media is here. It says, hello, Tom and team. SME Media, welcome to 56th Street and Park Avenue. We were on the topic of real estate. We're talking about a lot of stuff, but one of the big things that's happening in Manhattan specifically is the vacancy rates for commercial real estate is at an all-time high. And one of the reasons for this is because you're having a massive flight to quality. So in order to bring employees back to the office, they're not going to go back to some 1980s style cubicle. They're going to go back to a utopia like this, 425 Park Avenue. I think Citadel Securities has about, I think 150 employees here. I think they want to bring that to 1,000 by next year. So you're going to have a huge crowding into Class A real estate in New York City on the commercial side. And I don't know what's going to happen to commercial real estate in New York on the lower end of the spectrum. And it's so crazy because, guys, you're seeing rents continue to stay elevated in New York City as it relates to residential, right? So renting a 1-bedroom, 2-bedroom, 3-bedroom apartment, that's actually, rents have gone through the roof. But rents for commercial space have literally cratered. So I don't know. I don't really know what's gonna happen with all that. And a lot of this commercial real estate debt is set to be refinanced within the next 24 months, which is also going to be another disaster because think about where interest rates are. So if the vast majority of the debt in the commercial space, this is actually a really nice shot of the MetLife building and Grand Central Terminal. If all of that debt is set to be refinanced in the next 24 months, well, think about what that means. Fed funds rate is at 5% to 5.25%. That's the target range. That's 500 basis points more than what it was 24 months ago. So big problem. I don't know. Hey, Wanye Kess, good evening, Tom. How are you? I'm doing really good. I'm doing really, really good. How are you? Joan K is here. Says, Tom, I'm happy to see you back in action. I appreciate that. I'm happy to be back on a more normal schedule doing the live streams. And I think after next week, we should be good and ready to go. Now, if you look all the way down Park Avenue, you know, funny enough, Monday is the JPMorgan Chase Investor Day in New York. So tomorrow is going to be a pretty busy day in Manhattan, especially on Park Avenue. If you look right here, this is actually Jamie Dimon's brand new office tower at 270 Park Avenue, I believe. That's going to be JPMorgan Chase's brand new office. Oh, I forgot to turn on the subscribers only mode. That's all right. Hey, Joe Driver says, Tom, any thoughts on Florida history issues? Crazy. Florida history issues. What do you mean by Florida history issues? I don't know. History. Am I reading that right? Hold on. Hey, Max Clear says, Tom, I just walked those same streets just 2 months ago. Thank you for taking me back to those happy memories. No problem, Max. Hopefully you'll be able to find your way back to New York fairly soon. We'd love to have you back. Now, I wanted to show you guys something. This used to be the Four Seasons Hotel over here. I think it's still closed. So it closed during the pandemic. I think there was some sort of a fight between the city and the owner of the Four Seasons, I think. I'm not sure what the exact story was. Maybe somebody in the chat knows. But this whole building is totally vacant. I'll show you in a minute once we get back to 57th Street. But the Four Seasons Hotel is totally closed down still, which is crazy. Hey, Michelle Henry says, Tom, regarding rent, the neighbor above me moved out last week. And the week before, the neighbor that lived below me moved out yesterday. I wouldn't doubt if the rent was raised. I didn't ask. That's a good point, probably. You know, I advised my friend the other day to really negotiate like hell. You know, he has a 1-bedroom apartment on the Upper West Side in the 80s, really nice. And his landlord was going to raise his rent by $500. I said, look, I know that this is the building, by the way. It's the Four Seasons, completely empty. Crazy. Still empty from the pandemic. I wish I remembered the story. I read about it in the Wall Street Journal. I think the owner is either feuding with the city or something, because he didn't want to pay the taxes when he was shut down during the pandemic. I think something like that happened. I'm not sure the exact story. Maybe somebody could Google it real quick. If you just type in Four Seasons Hotel, 57th Street, Billionaires Row, it should pop up immediately, because this is a huge attraction to the city, especially on the upper end. 2 blocks down, everybody, actually right across the street from the Tiffany's building, is another 5-star hotel. I think it's called Aman, A-M-A-N. And those rooms, I think, start at like $2,000 a night, something ridiculous. Lou T. Williams' Four Seasons is funding with Time Warner and the brand. Interesting. SME Media says, speaking of top-level New York City spaces, Tom, did you read in the New York Times about the American Express Centurion Members Club? I didn't, but I think I heard about that. Where is that, SME Media, by the way? Where is that located? Anybody know? Yeah, Carol S. is like, shame. Lou T. Williams is feuding. Copy that. Feuding. Interesting. Yeah, I don't know. It seems like there's a lot of stuff. I mean, we're about to walk to Sutton Place right now. And this is really approaching more of the residential side of the East Side. And in a moment, you guys will see why I wanted to take you guys here tonight, because it's a really gorgeous neighborhood. But anyway, yeah, so I was telling my friend, this is what I was talking about. I was telling my friend, I'm like, look, everybody is really on the fritz right now, especially landlords, because you don't know what their exposure is to commercial, right? Chances are, if you own a multifamily property or an apartment complex in New York, maybe you have some exposure to commercial, so you never know what's in somebody's book, right? So you always want to negotiate like hell. And my friend says, yeah, that sucks. My rent's going to go up $500. You know, I can't negotiate it. I'm like, dude, everything is negotiable. Everything. It doesn't matter what it is. And you know what? I got this piece of advice from one of my sales managers way back in the day. And he's like, Tom, it's never what you deserve ever. You'll never get what you deserve ever in life. You'll only ever get what you negotiate. And that stuck with me for all these years, and it's so true. If you just roll over and you allow people to freaking steamroll you, you will be steamrolled and you will be taken advantage of. So you gotta have a little bit of a backbone and make the people work for the money. So I told my friend, I'm like, listen, pal, I'm like, you gotta make this guy work for that $500, okay? You just don't roll over and say, oh, sure, yeah, I'll pay the $500. Turns out he did what I told him to do, and they're only gonna raise it $100. You never know what somebody's exposure is, right? So it's a big problem, and it costs a lot of money to find new tenants in New York, by the way, too, especially if you're using a realtor. You pay fees and commissions, so you would much rather just have tenants that are good and that are well paying. So always negotiate. Always negotiate. It doesn't matter what it is. Always negotiate. All right, so this is 3rd Avenue. We got to walk over one more, and then I'll make a left. Or maybe I'll make a left here, because I think there's a Home Depot, and Home Depot actually reported earnings last week. I think we have Lowe's coming up this week. Is that right, everybody? Who do we got this week reporting on the earnings block? I think we got Lowe's, and we also have Costco, which I think Costco is probably going to report a great quarter, because Walmart had a beat and raise quarter. Walmart had a really, really good quarter. Oh, let me try to cross here. Yeah, we'll go up by the Bloomingdale's and then we'll make another right. I never bring you guys up 3rd Avenue anyway. This is Little Italy Pizza. There's a ton of these locations all over Manhattan. Quinn says, Tom, you live in a dream world? Maybe. Smee Media says the Amex Club is 1 Vanderbilt between 42nd and 43rd Street. Man, that must be amazing, because the observation deck at 1 Vanderbilt is amazing too. Now here's our good friend Michael Bloomberg. This building is very important. This is the Bloomberg headquarters. So not only is Michael Bloomberg a multi-billionaire, responsible for probably one of the biggest innovations on Wall Street in terms of the data analytics company Bloomberg. If any of you have used the Bloomberg terminal, that is thanks to the former mayor of New York City, Mayor Michael Bloomberg. And this is the offices. It's a really unique style building too, isn't it? Sort of like a roundabout. I think the TV studios and stuff are on this floor. Let me stand back a little bit just so you guys can see the futuristic looking architecture on the building. Although in the winter it does look a little bit better with the holiday decorations. They usually have a really big Christmas tree right here. But this is it. This is Bloomberg's headquarters. Jesus, that guy's taking a piss right there, man. People are nuts. Hey, Muscle Man says, I have just consumed a brownie. Very nice. Jafet Perez says, NVIDIA is up 100%. You know, semiconductors in general have been really outperforming and showing amazing strength. So again, as a contrarian, to sort of stay on that trend, yeah, look at the semiconductor index, everybody. If you type in ticker symbol SOXX, the semiconductor index is rocking. And I've said this before, if anybody's ever heard of Dow theory, essentially you would use the Dow transports as a little bit of a leading economic indicator, because if the Dow transports were rolling over and getting hammered, well, what does that mean for the economy, right? Because that is a very critical, or I should say was a very critical, it still is, part of the economy, transportation. However, I would actually argue that semiconductors are the new lifeblood of the economy and the new engine of the economy. Literally think about anything right now, and that includes semiconductors or chips. You think about EVs, it's going to take a lot of chips. You think about IoT devices, that's all chipsets. If you think about the very phone that I'm live streaming on, that's all semiconductors, that's all chips. You know, data centers, cloud computing, you name it. It involves chips. So my theory is that could we potentially substitute the semiconductor index, like the SOX or any of the other ETFs, for the Dow transports as a little bit of a leading economic indicator? Because if all of these semiconductor companies are getting bid up to the heavens right now, what is the market telling us about the economy in the next 6 to 12 months? And I don't think many analysts are talking about this. Not a lot of analysts are talking about this on Wall Street at all. In my mind, I think that in and of itself is potentially forecasting maybe a little bit of a soft landing and a recovery here. Take a look at ticker symbol AVGO. I think a brand new all-time record high. Super Micro Computer, MSCI, I believe. Even though that's technically not semiconductors, they make a lot of products for cloud computing, chips, and AI. Semiconductors have been doing well. Semiconductors have been doing really well, so we'll see. Well, we made it to the spot where we must make a right. You're going to see Sutton Place and the 59th Street Bridge.
I'll do it for free.
Yeah, username schmoozername says it's nice to come to finance talk that isn't all about the debt ceiling and doomsday panic. I think I'm going to award you with the Walks in Wall Street comment of the night so far. The night is still young. Oh my God, we've been streaming for an hour. It's crazy. Yeah, I mean, think about that. That's another thing that we could talk about in terms of contrarian. We won't talk about it though. You know, I'm not sure if everybody read the Barron's article. It wasn't quite the cover story, but I think it was, what was it? It wasn't Tech Trader. I don't know. It was one of the articles in Barron's, and they sort of resurfaced what Ray Dalio was saying about the debt ceiling. He's like, if it's not resolved, this could be a major calamity, and the S&P could go to 1,800. And we actually did an impromptu survey right here on Walks in Wall Street last night, and I said, what do you think is the probability that we don't raise the debt ceiling and we default? And a lot of people said like 80% probability that we could default on our debt obligations if we don't raise the debt ceiling. Now, my position is it's going to come down to the wire like it always does, and then we're going to raise the debt ceiling and spend more money in perpetuity forever. But a lot of people are forecasting that something bad could happen. I don't know. So maybe this is a contrarian idea that everything will be fine. Ninja says, Tom, once China invades Taiwan, they will cut the United States off from semiconductors. You know, I'm not going to discredit your comment. I do personally disagree with the fact that China will invade Taiwan, but I think it's appropriate to keep that comment relevant, because it is possible. Maybe they do. However, if you think about the CHIPS Act that the Biden administration put in place, this was actually one of the only things that I was in big support of, and I've talked about this a lot on the channel. I am a huge proponent and supporter, and I think it was the right thing to do, this CHIPS Act, because it's going to help reshore and bring back manufacturing capacity to the United States as it relates to semiconductors. And if you think about a lot of the chip fabricators, or the chip fabs, there's multi-billion-dollar investments being made right now in states like Ohio, in Arizona, to build new state-of-the-art chip fab plants. Now, again, that's not going to be like you flip a light switch and all the production moves to North America. I understand that. But I think it's a step in the right direction. But I think we do need to keep that in the back of our minds. I think the probability that China invades Taiwan is really low. But again, maybe that's a contrarian take. Maybe they do invade Taiwan. I don't know. I'm not really too good at geopolitics. I think you guys know from probably one of the worst calls I've ever made in my life was right here on the live stream. Real quick, this is the 59th Street Bridge, everybody. So this is the on-ramp. So this will take you to Queens. Well, it'll also take you to Roosevelt Island, or over Roosevelt Island. But this will take you to Queens. A lot of traffic here. But one of the worst calls I've ever made in my entire life was actually right here on the live stream. I'll tell you about it as we cross over to the other side, because I want to take you guys to Sutton Place. I'm getting a little bit distracted, but this was prior to Russia's invasion of Ukraine. And if you remember correctly, I was really steadfast on this idea that there's no way that Putin is going to invade Ukraine. This is all propaganda. It's all nonsense. And I was really hammering on that hard. And there was many of you in the chat were like, no, Tom, you're totally off here. They are going to invade. You're wrong on this one. And you guys were right. So ever since then, I'm like, you know what? I got to stick with where I have an edge. I'm not a geopolitical guy. I don't know about these things. You know, a lot of people in this chat do and have that expertise. I don't. So maybe China does invade Taiwan. Who knows? But, you know, we'll see. So hopefully, usually this is a big internet dead zone here, everybody. So just bear with me. Right as we walk under this overpass, there's usually a blackout zone for the internet. So maybe we'll have to start up the stream. Brendan O'Brien says, Tom, can the liquidity propping up the market continue? Well, I think generally speaking, the markets are relatively illiquid, comparing them to where they were in 2021 and 2020. But yeah, I mean, if you think about what drives markets, it's two things. According to Stanley Druckenmiller, he would say it's one thing, and that is liquidity. And really the Fed controls liquidity and earnings, right? So everything the Federal Reserve has been doing up to this point is actually sucking liquidity out of the market while raising interest rates. So you could actually go to the Fed's website and look at the balance sheet, and instead of purchasing massive amounts of mortgage-backed securities, instead of purchasing massive amounts of US Treasuries like they were doing to provide liquidity and to provide stimulus, they're actually letting a lot of that debt roll off the balance sheet, right? And there's a very high correlation between the Fed balance sheet and the S&P 500, right? Literally, if you go to the Federal Reserve's website, and you guys could do this right now in real time, by the way, I've actually made an Excel model that updates in real time with this data. Look at the Fed balance sheet. It updates in real time on the website. And look at the S&P 500 since 2008. And you tell me that's not a ridiculous one-to-one correlation there. It is. It's liquidity. It's stimulus. So again, in Ray Dalio's book, he talks about this, and I would highly advise everybody read it. Real quick, this is First Avenue right here. Look at how cool that looks. This is the 59th Street Bridge. There's actually a Trader Joe's inside the bridge, which is so cool. There's a TJ Maxx, but this will take you all the way over Roosevelt Island into Queens, over there in Long Island City. Speaking of very expensive real estate, Long Island City has totally changed, totally transformed just over the last 10 years alone. I mean, there's some really nice, luxurious buildings there. I think Dan Zhang was telling us about a couple. You can get one bedrooms there for like $3,500 to $4,000. That's Manhattan pricing, guys. And you're seeing that in Long Island City. So it's a very fashionable area, very up and coming area. They're building that up like crazy. That kind of reminds me of what they've been doing in parts of Brooklyn, particularly by Atlantic Terminal, Brooklyn, Dumbo, Greenpoint is another big one. I mean, just look at, what Greenpoint was 15 years ago and some of the buildings that they're building today in Greenpoint. I used to live there. It's a gorgeous neighborhood, but anyway, I digress. But in Ray Dalio's book, Principles as well as Changing New World Order, he does a really good job about outlining to the audience what makes up a business cycle. What are the drivers? What are the mechanics? What are the fundamentals of a business cycle, right? And it's all about central banking. It's all about the Federal Reserve pulling those strings, pulling those levers on the economy by using all of their tools, right? Which is raising or cutting interest rates, expanding or letting the balance sheet contract. And there's very high correlations with valuations in the stock market, valuations in the real estate market, and interest rates. Because at the end of the day, and I've said this many times, at the end of the day, guys, the debt market or the bond market is just the price of money. So if you studied the bond market in college or something like that, just keep it simple. Interest rates are just the cost of money. It's the price of money. And as the price of money gets more expensive, people are more reluctant to take on a lot of that new debt acquisitions, right? Because it's going to be more expensive. That's why you see the correlation in the investment banking business decline as interest rates go up. You think about merger and acquisition activity, right? If the cost of financing is really high, well, companies are going to be thinking twice about making an acquisition, about buying a business, about expanding that business, right? This is Sutton Place. It's one of my favorite neighborhoods in all of Manhattan. We are now on the corner of East 59th Street and Sutton Place. And I think you guys are going to love this neighborhood. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams about every day starting at 8:30 p.m. Eastern, walking around New York City, walking around Miami, exploring all the different neighborhoods and talking about the financial markets. Let me cross here. Look at that view looking uptown in Manhattan. It's a huge hill. I've rode this hill many times on a skateboard. Very dangerous, very stupid, but that's what you do when you're a teenager. Anyway, I'll give you a quick shot of the bridge here. Yeah, Bagels and Walks is a beautiful neighborhood. Every street has great views and amazing parks. I agree. Yeah, I mean, Bagels and Walks makes a good point. Now, one of the things you'll notice, to his point, as we walk down the main streets here of Sutton Place, as you make a left, there are all these really nice parks. Some of them are public, some of them are private, but they have unmatched views of the East River and Queens. I'd like to show you some of them tonight. But notice the architectural changes from these buildings. So we were just in Midtown Manhattan, we were just on Billionaires Row. Big glass skyscrapers, super talls, mega talls. Now you come over to the east side, you come over to Sutton Place, and it sort of feels like a neighborhood, right? Look at these. Really nice, simple buildings. You can have some brownstone style buildings, you have some of the railroad style buildings. Really nice. As we head further down, you'll sort of see, these amazing grand entrances with these really nice oak doors, these just really amazing entrances. I mean, imagine living in Manhattan and it's sort of like you're living in suburbia. You actually have a front door, right? You go right into your house. You actually kind of see into this one. I think 56th Street is what I'm thinking about. You guys will see as we sort of head down here. Hey, Ryan Beck, what's up? Yeah, very elitist, didn't know they existed or those existed. Yeah, it's all these beautiful townhomes. Let me take you guys down and check out these. I think you'll enjoy these as well. Now, keep in mind, your view is the East River. Your view is Long Island City. And notice how quiet it gets. Look at these townhomes. Really beautiful. You have these really nice bay windows. Now, some of them have been redone, fully gut renovated. Others are the original windows since these have been built 100 years ago. I think I'll use this one as an example. You actually have some of the permit paperwork here. So this is probably going to be a total gut renovation. Imagine that. You could already tell on the second floor, these are brand new windows that went in. You have the brand new storm shutters. Really amazing. And then you walk out. Imagine walking out in the morning, the sun is rising, you have a copy of the Wall Street Journal or Barron's in your hand, and you go to your own private park and you watch the sunrise over 59th Street Bridge. It's unbelievable. Look at how unique some of the doors are. These big, almost like cast iron style doors. Somebody's asking how much. That's a really good question. I'm not too sure. If I had to guess, probably what happened with this one, if I had to guess, there was probably somebody who owned the property already and they're either doing a gut renovation for themselves to live in, I highly doubt it's a rental. Maybe it is. But check out these guys. This is what I really wanted to show you. Check this out. Now, you know these are very, very expensive in prime properties when you have your own personal driveway in Manhattan. I mean, that's unheard of. So very, very quiet, absolutely gorgeous tree-lined street. You have this amazing contrast from the super tall mega high-rises to a more community feel. Personalized garages, driveways, tree-lined streets. And your view in the morning, at night, watching the sunset, is the 59th Street Bridge, the East River, and I think, yeah, Roosevelt Island, right here. It's an unbelievable view. Yeah, username, schmoozername. We did have this exact conversation about the driveways a few months ago. Look at those homes. Unreal, guys. I'm going to try to put the camera up so you can see it a little bit. You know, did I tell you guys I went to Boston the other week? So I went to Boston, and a lot of the buildings, at least where I was at, and don't even ask me where I was at, I have no idea. I only spent like 24 hours there, but a lot of the buildings in Boston look exactly like this. Like old colonial style. That's the sort of style I could explain it. It was really nice. You know, I was surprised. I liked Boston a lot more than I thought I was going to. Yeah, look at this. So here, you have a totally private backyard. Imagine that. I'm not sure if you guys can see this. Try to focus right here. I'll try to focus the camera as best I can. I believe you can see all the way to the Williamsburg Bridge. This is the park. Yeah, Wobbies is in Boston. They are nice, but they are stupid expensive. You know, I'm convinced that anywhere that's desirable to live, like where it's a really desirable place, is going to be, the price is just going to get bid up no matter what at some point. Now look at this. This is your backyard. You have your personal backyard here. Hey, Travel Fan Factory. Good to see you. I'll catch up on some of the comments now. I just want to show you guys the park here. We haven't been here in a long time, and we do have a lot of new viewers, so I just want to make sure you guys are seeing the more newer parts of the live stream as opposed to just 57th Street all the time. But that's Long Island City. You can see the very famous cola sign there. Oh, does it really? Ben Cunningham says it reminds me of Philly a little bit, of Old Town Philly. You know, I've been to Philly once, been to Philadelphia one time. But here's the thing, I only spent about literally 20 minutes in downtown, and then I had to take an Uber. I'm trying to remember what town it was. It was like the suburbs, and the only thing I remember about it is the houses were massive. Like these were like, I mean, from what I'm used to, these were like mega mansions. I'm trying to think of what the town's name was. Anyway, this is the new elevated East River Park, I think it's called. I didn't even know they were making this until I think photos from around New York told us they were making this. But this is going to be amazing. And then you have the highway going through. Looks like the water currents are actually really strong. Hey, Michael Joseph says, Tom, I knew you would like Boston. New York City and Boston have identical architecture. Yeah, I liked it. I would like to spend more time there. I was there for, I'm blanking on the name. I don't know why I can't remember the name. It's like a wedding party before you get an engagement party. There you go. Oh my God, I'm losing it. I was there for an engagement party. I had a really good time, but I would like to spend more time there. AD is here. What's up? All right, let's head back in towards Midtown Manhattan a little bit, but I'm glad I got to show you guys Sutton Place because this is one of my favorite neighborhoods in New York City to live. Now, you guys know the Upper West Side is probably my first choice, but you know, not a lot of people talk about Sutton Place, and it's almost as if you get a little bit of escape from New York City, if that makes sense. And chances are, if you work in Midtown Manhattan, you never have to take a train. You could literally just walk across the avenues to your office, and then while staying on the island of Manhattan, oh, look at this. The water taxi's freaking ripping across. Look at that. This one has all the permit paperwork on it too. Look at that. Man, could you imagine owning the entire townhome right here? I think that is the ultimate goal. I could just imagine yourself walking outside of this gate, and then boom, that's your view in the morning as you pick up the paper off the ground. That's unreal. Hey, Cooking Bro, what's up? Says, I'd love to live in New York City. Well, please come down. We'd love to have you here. I'll take you guys down a little bit further, just to show you some more of the buildings here. Take a look at this. This is all brand new. This is all remodeled. Looks like a full gut reno. But they've managed to keep the integrity of the architectural style, which I like. Some of them, and you'll really notice this when we're down in Florida, when we do our South Beach live stream, a lot of the older Art Deco buildings that are really in disrepair have been torn down, and they've been developing these more modern style that are sandwiched right in between the Art Deco style buildings. And to me, it just doesn't really fit. Some of you liked them in the stream, but it just doesn't fit. It's just sort of like tacky. I don't know. Not to be too negative, but check these out, guys. Look at that. Hey, Alexander says we're moving there next week. Can't wait. Hey, awesome, man. Well, welcome to New York. You're going to have an awesome time here, I'm telling you. You're going to be so successful here. Okay, the city's coming back in a big way, and you're coming just in time. It's the summertime. So welcome to New York, my friend. Look at how gorgeous the architecture is on this building. You have these really heavy, almost like cast iron doors. This one's all brand new too, you could see. You could automatically tell by the windows. I'm not sure if it comes out too well on the live stream, but these are all brand new windows. This is by far my favorite. You guys know why? Because you have that, it's almost like a cherry colored door. Look at how that door, that little detail, makes the whole building pop. Look at that. It makes it stand out from the rest just by having that door. That's awesome. And it has the little mail slot. Reminds me of those old cartoons where the mailman puts the newspaper through the door and the dog goes crazy on the inside. Speaking of those huge wooden doors, look at these. The whole block are these gorgeous homes. Hey, Friendship Lights, good to see you. Welcome. Matt says New York City will never be back under Democrat leadership, let's be honest. I don't know. I think, as a conservative myself, I think New York is very unique in that it'll always have demand because it's really a business epicenter, and it has the highest concentration of universities and really, really good universities. And we've talked about this before, and it does relate to the financial markets because, historically, if you think about all the big high-paying jobs, right? Investment banking, software engineering, tech sales, consulting, management consulting, right? If you want to work at EY, KPMG, something like that, they really recruit out of select classes at the top 50 schools. And we have a ton of really good schools in Manhattan, but in New York State in general. If you go a little bit further in upstate New York, you have Cornell University in Ithaca. If you go all the way upstate, you have Syracuse. Right here in Manhattan, you have Columbia University, which is another Ivy League school. So the talent pool is here, right? And that's the good news. But I think it's also appropriate to acknowledge the other side as well. I think you make a good point. Speaking of JPMorgan Chase, it's a bummer that the park is closed tonight. It's a real bummer. Man, I wanted to show you guys this. That's all right. I think they close it off at dusk, but this is like the best view of the East River you're gonna get. Oh well. We'll continue to walk southbound. But yeah, I think New York will always have strong demand. But to your point, tomorrow JPMorgan Chase has their big investor day in New York. So New York is going to be very busy. However, to be honest and keep it real with you all, for the first time ever, and Jamie Dimon actually announced this on his interview with Bloomberg about, I think it was 3 weeks ago now, maybe 4 weeks ago. I don't know, time is like an illusion after COVID. Anybody else feel that? Like after COVID happened, time is just totally an illusion? Anyway, for the first time ever, there's more employees at JPMorgan Chase that work in the state of Texas than in New York. Now, if you were to tell me that would be a thing 5 years ago, 10 years ago, I would say you're crazy. When you think of New York City, you think of Wall Street, right? I think that could be appropriate. You think of banking, you think of Wall Street when you think of New York. But for the first time ever, there's more JPMorgan Chase employees in the state of Texas than there are in the state of New York. It shouldn't have to be like that. That should not be like that. But anyway, we won't get too political on the stream. Hey, Dusty Cole, good to see you, my friend. I'll try to get you guys up into this park, but I have a feeling this one's closed as well. But we might as well try since we're here. It's only up a couple flights of stairs. Oh, I think it is closed. Well, we'll see. We'll go up the ramp anyway. But if you guys want to come here by yourselves, no tourists come here. I'm telling you that. This is all New York residential experience. And look at that view of 432 Park Avenue from here. That is awesome. That's a really unique view. Look at that. So you have all these colonial style homes, and then you have a glimpse into the world of Billionaires Row. Very cool. Yeah, I think all these major parks close at dusk. But I'll try to give you guys a quick view into the park. Yeah, Chinook Wind says Austin is attractive. I've been to Austin, it was all right. It was all right. It's no New York. Yeah, it's locked. Oh well. Let's see what time it closes. 9 p.m. But I think you guys get the picture. Sutton Place, very beautiful. So we'll head back into Midtown Manhattan. I feel like I wanted to cover some more things with you guys. Oh yeah, we're getting some housing data coming out on Tuesday. So the Census Bureau is going to release new residential sales data for April. So consensus is for seasonally adjusted annual rate of 650,000 new single-family homes sold. That's about 33,000 less than the prior month. This is East 56th Street, so we might as well just head over. That's going to bring us right back to Billionaires Row. We're at a green light here. I think we could cross anyway. We'll be good. But home prices have been not coming down as fast as I would have thought. Not coming down as fast as I would have thought. And I think the main reason for this is because we haven't really seen that explosion of supply that many people, including myself, were predicting to have already happened by now. Now, let's do a post-analysis and ask ourselves, why might that not have happened? Well, ever since 2009, sort of like what we talked about before, interest rates have stayed artificially suppressed. We've stayed in this environment of quantitative easing and artificially suppression of interest rates. So the vast majority of people who have a mortgage on their primary residence right now have an interest rate that of below 4.5%. So the theory is, why would anybody sell right now when they have a very attractive interest rate, knowing that when they sell, even if they can get a very nice return on their investment and get a pretty good equity return on their investment, they'll just have to go right back out into the same market as everybody else and pay top dollar while the cost of money is 100% more. I think the average 30-year fixed rate mortgage right now is what, 6.8%? On a conforming, right? If you just have a regular conforming loan, maybe you're pushing 7%. Now, interest rates are probably going to go up next week. If you look at the 10-year US Treasury yield, I think we're at 3.69%. And I think that's going to go up next week because of all of the debt ceiling fears. First Avenue and East 56th Street. But I don't know. I mean, have you guys been seeing in your neighborhoods more homes coming onto the market? Or maybe you own a home right now and you're thinking of listing your home. You know, I think if you own a home right now and you're actually thinking of listing a home, you could probably still get top dollar for it. But I don't know. What are you guys seeing in your markets? Wabi says the market is definitely bare where I am. Joe Driver says, Tom, people keep giving up their cars, repos, keeping their homes. Repossessions are up. You know, I have been watching that too. That is an area for concern. Car debt, just debt in general. Consumer debt in general has exploded. It's a good point. Let me catch up on some of the comments. Username, schmoozername says so many people have low rate mortgages. They don't want to lose them. Good point. A lot of people saying not a lot of inventory. Michael Joseph's commercial defaults. Yeah, we covered that, and it's so strange, right? Because if you think about a city like New York, if you think about rents for residential rents are very strong, but commercial rents are literally in free fall. Now, we did get a little bit of leading economic data from the Home Depot's earnings report. And technically Home Depot did beat earnings, right? But the forward guidance was a little bit lax, and I think if you could sum up Home Depot's earnings report in maybe like one or two sentences, it's that American consumers are holding back on the very big renovations. Now, here's how I interpreted that. I think you had so much pull forward in 2020, I should say the latter end of 2020 up until 2022, of people doing major remodels, major renovations, major demos, because they were locked in their homes, right? If you're spending more time in your home, by default, you're gonna find things to do. We're both working from home, honey, let's redo the kitchen, right? Let's convert the garage into a den or something like that. So I'm not sure if demand, or I should say the ability for consumers to pay for these remodels have dropped, but just the demand has dropped because we had so much pull forward, right? And one of the ways I could sort of explain this, and I actually called this, by the way, in the tech sector, because you guys know my whole career is in tech and telecom sales, most recently in enterprise tech sales, right? So selling big complex deals to Fortune 500, Fortune 50, Global 2000 clients. And what I saw during the pandemic, when all of this fiscal and monetary stimulus was getting jacked into the economy, the amount of spending that not only publicly traded companies and private companies were investing into technology infrastructure, but the public sector as well. I mean, some of my friends and some of my colleagues that were public sector account executives made a fortune, particularly dealing with the public schools, because they purchased an ungodly amount of Chromebooks, an ungodly amount of cybersecurity software. I mean, it's just an unprecedented amount, and I estimate that was probably about 2 to 2.5 years of spending condensed into 6 to 8 months. So if you look at the data, and this was actually published in Barron's not last week but the week before, smartphone demand, tablet demand, and regular Chromebook and laptop demand on a year-over-year basis is down 15%. Right? So if you're a public sector rep and you talk to a principal of a school district and say, hey, you ready to place that order for 10,000 Chromebooks for your district? He's going to be like, what are you talking about? I mean, we have more than enough than we need. We're not going to need to purchase any more until Q4 of 2024 actually. So I think sales are down, not because people have the inability to pay, but just because they already have all the stuff they need. I don't know, you guys seen anything similar in your markets, in whatever jobs that you have? I know that there's a lot of people in tech sales, in software sales, and chances are if you were in tech sales or software sales, you probably had a record year in 2021 and 2022. Hey, Jojo is here. Good to see you, Jojo. Yeah, this is kind of cool. We're approaching 3rd Avenue now, and we have a very unique view of 432 Park Avenue here. Yeah, Hawkes is 919 3rd Avenue is also Bloomberg. We were just there earlier in the live stream. It's a very unique building. However, I do enjoy it more during the winter time. They decorate it really nice for the holidays. Hey, Sally's here. What's up, Sally? ERIGs, the school districts are constantly replacing Chromebooks. Ours just ordered at least 5,000 more for year-end testing. Hey, very cool. That's a good piece of data. Yeah, I mean, during the pandemic, I was working a deal. I can't say which district it was for obvious reasons. 55,000 Chromebooks, all kitted out with MDM software. So for those of you who don't know what MDM is, it's a mobile device manager. So it's like an endpoint security software. So I mean, if you have each license billing at $2, I mean, think about the ARR on that. Just ridiculous. But to your point, you have to accommodate for breakage. I mean, if you have remote schooling, well, which we did during the pandemic, and you give these kids a Chromebook, I mean, I just imagine myself in high school, I would totally break that thing. So, yeah, it's an interesting perspective. So there you go. 5,500 order. It's a pretty big order. Now, let's talk about Bernie Madoff for a moment. You see this building over here? You see this building right here? It's called the Lipstick Building. And this is where Bernard Madoff ran his Ponzi scheme, right here. Right there. Now, many of you have been telling me to watch is it a documentary series on Netflix about Bernie Madoff? It all went down right here. I haven't had a chance to check it out. But this is some major Wall Street history right here. And I think this building is now mostly vacant. Yeah, Wendy England's like made off with people's money. Yeah, Chinook wins right here. Hey, Beverly Hill, welcome. Good to see you. Atlas is here. D, what's up? Horatio Snipes. Yeah, but that's where it happened, everybody, right there. I gotta watch my battery. But Horatio Snipes, good to see you, sir. Happy Sunday to you. We've been covering a lot tonight. We were all over the place, but we got through a lot of material tonight. Now, for those of you who are just joining, the main theme for tonight, I understand it's supposed to be the Markets a Look Ahead stream, which it was, but, Sam Zell, which is, a real estate icon, a real estate legend, he did pass away last week, unfortunately. And Sam Zell is a great contrarian. His nickname was the Grave Dancer, right? Because he was what you called a distressed investor, right? So great contrarian. So I think we talked about a lot of contrarian views. We talked about the University of Michigan Consumer Sentiment Index being at all-time record lows, 40-year lows. So you have consumer sentiment at all-time lows, but you also have cash balances at all-time highs. So cash on the sidelines, not invested in equities, not invested in real estate, is at an all-time high. You look at money market funds, you look at fund flows, in the money markets, all-time highs. All while, hold on, we'll let the FDNY. Love the FDNY. Hopefully everybody's all right. We just came from that way. Sutton Place. But yeah, I mean, look, if you look at all of the major equity indices, oh, here's another one. Wow. Wow, more of them. Hopefully there's not a fire and it's just like a gas leak. Anyway, so if you look at all the major equity indices, the NASDAQ, which had an amazing week last week, up 3%, markets are climbing a wall of worry, even though this market is very thin, right? We talked about It's called the breadth of the market, the overall breadth of the market, right? So look at, and if you guys want to follow me on Twitter, I post a lot of market data, market analysis for free. You can follow us at Walks Wall Street, or just go in the links in the descriptions down here. You'll be able to see it. But I posted a screenshot of the NASDAQ advanced decline line, and we're about to punch another low, all while the NASDAQ is gunning for a 52-week high, right? Up 3% last week. And if you look at the weightings, because remember, the NASDAQ and the S&P 500 are market capitalization weighted indices, which means the larger the market cap of the company, it commands a higher weighting in the index. So I'll give you guys a free resource here. Just go to slickcharts.com, okay? So SLICK charts.com, and it'll give you a visual breakdown of the percentage basis of the weighting in the S&P 500. So as of right now, Apple, ticker symbol AAPL, makes up over 7% of the entire index. Think about that. And the top 10 stocks in the S&P 500 make up over 30% of the entire index. Think about that. Over 500 companies, I think it's like 502 companies in the S&P 500. 10 of them make up 30% of the weighting in the index. So if you look at the performance of Apple, if you look at the performance of Nvidia, of Microsoft, of Alphabet, of Meta, those stocks have really been carrying the index. But under the hood of the market, you see severe deterioration. This is a really good shot of the Chrysler building here. One of my favorite Art Deco buildings in Manhattan. We got another FDNY truck coming down. Yeah, Michael Joseph says NASDAQ is in an AI bubble that may or may not be priced right. I agree with that. You know, Michael Joseph, did you watch the All In podcast that just dropped last week? You would love that episode, because Chamath really talks about that. I'm not the biggest Chamath fan, by the way. Obviously, I've been very outspoken about the SPACs. I think that was probably my greatest call of my career, right? I've made a lot of horrible calls, and you guys see all these calls in real time, but I think my greatest call was all this SPAC nonsense. The moment they started popping off in 2020, I said, all of this stuff is going to be a total scam. And it was. Anyway, so on the All In podcast, Chamath was talking about this interesting dichotomy that's going on Wall Street as it relates to AI. And he explained it to me like this. Well, not to me, he explained it to the audience. And it was really thought-provoking how he explained it. He's like, usually in every other innovation, like literally every other innovation during the tech and telecom boom, you know, during the SaaS boom, software as a service boom, it was always Silicon Valley that was, let's run and gun. You know, the old saying in Silicon Valley was, you know, move fast and break things. And it was always Wall Street, the investment banks, the hedge funds, the family offices that were sort of like, all right, easy, easy. You know, maybe valuations are getting extended. Maybe valuations are getting ahead of themselves. Let's sort of rein in on this a little bit. But with AI, artificial intelligence, machine learning, it's almost the exact opposite. It's a little bit weird. You have everybody in Silicon Valley, some major billionaire entrepreneurs like Elon Musk saying, hey, let's slow this thing down. You know, we could be letting a cat out of the bag here. Let's sort of pump the brakes. And then Wall Street is freaking jamming money down the throats of these companies, right? Bidding up the valuations. And Wall Street is like, let's run and gun with this. So it's sort of like you have this huge 180 shift that we've really never seen before. It's usually the other way around, right? It's usually the tech bros and the SaaS bros that are out there running and gunning, you know, move fast and break things. But it's sort of shifted, it's sort of switched with AI. You have private equity, venture capital, big VC money going into artificial intelligence, when Silicon Valley is like, let's pump the brakes on this thing a little bit because this could be really bad. Kind of interesting. Hey, Bill Rollins is here. What's up, Bill? Good evening to you too. Thanks for joining. Michael Joseph says, Tom, I was in the middle of the dot-com bubble right out of college. This is very similar feeling. Earnings eventually catch up and matter. I agree. I don't know if it's this, like, again, I didn't trade through the 2000 dot-com bubble. I was like 3 years old in the, 3 or 4 years old during that, right? But if you look at, valuation metrics and things like that, and if you look at price to sales, price to earnings, I don't know. It doesn't really feel like that irrational exuberance like we felt in 2020 with all the meme stock nonsense, right? A lot of that stuff has been crushed. But who knows? Maybe you're right. It's a good point. Hey, Blues Rider, what's up? Good to see you. Username, schmoozername says Chamath likes to hear Chamath talk. That's true. It's the IBM building. Hey, Evan Weeks, what's up? Says Tom, current AI is like a generational jump in computing. It's got the potential to shatter current limitations and usher in a boom in tech. Of course, it could also be like splitting an atom. Evan Weeks, that's a really good comment, by the way. Appreciate you sharing that. Did you see this? Well, I'm not sure if you're on Twitter, but I'm going to find it. I'm going to take a screenshot of the post. And it was essentially the concentration of tech in these major indices. I forget exactly what it was, but I think it was the concentration of technology into the top 50 in the S&P. And they were comparing that to the year 2000. And many people were like, see, we're just back to the level where it was at the year 2000. It must crash now. But to me, I actually interpreted that data completely the opposite. I interpreted that it took over a decade to get back to the tops of the year 2000 with all of that innovation, with all that building. If anything, I see that's going to break out and go gangbusters, right? So I see it in a little bit of a different way. It's sort of like this, right? If anybody has a Bloomberg terminal or trading view, wherever you look at stock prices, I want you to go and look at a monthly time frame of Microsoft. Go ahead, pull up a monthly chart of Microsoft. And I want you to notice where Microsoft topped in the year 2000, and notice how long it took for Microsoft to reach back to new all-time record highs. And I remember reading this stuff in 2014 about Microsoft is now trading back to where it was at the year 2000. The stock must crash, it's overvalued. And in my head, I'm like, no, this is like a blue sky breakout in a massive base, and Microsoft's an extremely profitable company. This thing is gonna go gangbusters. And it's since ran like 250, 300%. So, again, studying market cycles, you have irrational exuberance, right? And I think to sum that up in like one sentence, I forget who said this, but people severely overestimate what they can do in the short term, but they severely underestimate what they can do in the long term. And I think that's the same thing in the investment business. And in the year 2000, everybody overestimated what could be done in the short term, but severely underestimated what could be done in the long term with cloud computing, with software as a service, with AI. I think it's going to be the same thing. This is that Amman Hotel, by the way, everybody. I think the average night is about $2,000 a night at this hotel, AMAN, right here on New York City's Fifth Avenue.
Kind of crazy, right? Imagine shelling out $2,000 a night for a hotel room, and that's the cheapest room, by the way. I think this is one of those new Maybach trucks. Yeah, this is one of the new... I always see this guy. We always see this guy every stream. Anyway, yeah, Evan Weeks is an all-out, outspend, out-innovate the competition race. Yeah, and I tend to be an optimist. There's a lot of what I like to call fear porn out there with AI. But I don't think it's going to be a supervillain, diabolical world. I think just people grow into technology and just get used to it. Hold on, we'll let this ambulance pass. I mean, in the year 1995, if you were to tell somebody, hey, in the year 2023, the average human is going to be turned into a humanoid robot, they wouldn't believe you. But that's what we are right now. If you really think about it, every single human on this planet right now is just a humanoid robot that is a supercomputer. Think about it. Think about if you were in college in 1995, and I always say this. I know you guys hate when I say this, but it's true to have perspective. You have every single answer to every single question at your fingertips instantaneously right now. All you have to do is say, hey Siri, who is the president of Zimbabwe? Boom, instantaneous answer. Literally to anything. That is a supercomputer in an extension of yourself. And in 20 more years, it's going to be that times 100. So it's going to seem normal as you grow into it. So I don't know. I don't really buy the narrative that AI is going to destroy the world. I don't. Maybe that's just because I'm a perpetual optimist. But I think anything that's new, people are very afraid of. My phone's going to die. I'll probably have to end the live stream here. But I don't know. Maybe I'm wrong. I could be wrong. Probably am wrong. But guys, I'm on 5%. We are going to have to end the live stream here. But we are right up against time, the 2-hour mark. I want to thank everybody for joining the live stream tonight. I think we had an amazing conversation. I appreciate all of you for joining. If you've enjoyed this live stream tonight, feel free to give the stream a like and click the subscribe button. Subscribe to the channel. We usually go live starting at 8:30 p.m. Please join us the next stream. I have a lot of fun doing these, and I wish you all a fantastic week ahead, okay? Stay optimistic, stay positive, and finish strong, because next Monday is Memorial Day. Big holiday weekend. So Using People, I appreciate you. Thank you for being here. Wabi, thank you so much. Travel Size Life, I appreciate you very much. John Abraham, Muhammad, thank you. Sabrina Fair, Ninja, Steve CR, Bill, Wendy England, Susanna Q4, Sunshine After Rain, Richard Vogel, Blues Writer, Love is Kind, I appreciate you. Teresa Diaz, TD from California, thank you so much. Joan K into the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. I'll see you guys right back here live from New York, 8:30 p.m. Take care.